video. Yeah, so anyway, I'm going to tweet the link to this and then we're going to get started. So Uber, I put a link in the description so you can check out hypercharts.co/Uber and you can go to the stock price tab or just click the link below and you will be taken to check out the live stock price of Uber, which is pretty exciting. And so 1 second, I'm just going to tweet the link to this video so we can get some more people joining. Meanwhile, you should definitely be thinking of questions you want to ask. 1 second. Okay. What up, HyperChange? So I titled this video saying that the Uber IPO is a flop because that is exactly what I think it is. And we're going to go through why with the links that I put in the description here. So go to hypercharts.co/Uber/price and you can see the price of Uber, which is open trading today. Originally priced their IPO at $45 per share yesterday, began trading today at $42 per share and is now at $43.75. So Uber is listed a mega IPO. They've completed here. This values the company at $73.4 billion at $44 per share. And so why I think this is so fascinating is because Uber, you may have remembered in the news, this used to, their original target like 6 months ago when they wanted to IPO this thing was for $120 billion valuation. And then it was $100 billion valuation. Then they were like, ooh, it's looking like 80 to 90. Now it's 74. And so usually on IPOs, like you may have noticed Zoom, Pinterest, Beyond Meat, they have a huge pop. They have the IPO pop, which is something that people try and price into the IPO, which incentivizes all these institutional investors to buy into the IPO ahead of time because there is a pop. So the bankers are trying to manufacture a pop when they list it. And so despite them taking the huge write down in the valuation of Uber, they still couldn't even get a pop at 74 billion. And so this is a really bad sign. I want to actually check what Lyft is doing right now as well, because you can check out Lyft they're on HyperCharts. Lyft is down 4% today as well to $52 per share. So the whole ride sharing industry is getting hit right now. And I want to talk a little bit about why I think that's happening. So if you go to the financials tab on HyperCharts, you can see that Uber's growth is slowing to below 20% or to below 22%. Sorry, it's at 22% last quarter, just under that. So this is a company that is still valued. You know, they did like 11 billion in sales last year, 74 billion. You know, there's still like 6 times sales for a company that's only growing in the 20% range, that's losing about 25% margins. Like people just aren't excited about this business. I mean, if you go to the financials tab here, you can see that they're just losing a ton of money. They lost $1 billion on a little less than 3 billion in revenue last quarter, worse than 33% operating margins, barely improving year over year the losses. So we're looking at years and years more of losses and not really a strategic or clear path to a way that this company is significantly profitable with their current business model. And so people are realizing that, yes, there's a huge disruptive opportunity here for Uber and Lyft to get a piece of this the transformation in the transportation industry that's happening. You know, transportation as a service, less people are owning cars, autonomy. I think there is a potential that these companies are huge players in the future of the industry as like this sort of lead generation, whether you want to get on public transit, whether you want to get a scooter, whether you want to get a bike, whether you want to get a car, whether someone's driving it or not. You know, you could just open Uber, Lyft, or take public transit or the subway, and they could integrate with all of these services and be like sort of a lead generation. That's why Uber and their CEO has pitched them as like the Amazon of transport, because they want to be like this generation for no matter what you want to buy, you can get on Amazon. So no matter where you want to go, you can get there with Uber. And so, and the other thing I think it's really cool, one of my favorite analogies taken from Gary Vee actually about Uber is what they really sell is time. And I love that analogy. What Uber and Lyft are selling is time, convenience and time, and just stress-free of getting somewhere is really the business that these companies are in. And I think there's a lot of disruption happening with how we get from point A to B. So I don't know, I'm not writing off that these companies aren't good, but I just think in their current state, they're losing so much money, and the valuation in the private markets, that's what this is highlighting. There's a huge disconnect in the valuation between the private markets and the public markets, and that's what we're seeing here. You know, the private markets were buying Uber at these prices years ago. Ethan, thank you for asking how so. So now let's go to the link I put that says Bloomberg. It's a Bloomberg opinion article. And if you have, you can scroll down, there's a chart that says basically the per share it's called per share price of Uber stock sales over the past 5 years. So they do, like, occasionally when you have a huge company like Uber, they'll actually do like mini IPOs or allow employees or investors to like sell chunks of stock to like special investors. And so we can see the price at which those transactions occurred and then get a gauge for Uber's historical stock price even pre-IPO. And that's what this chart does. If you're just joining now, click on the Bloomberg link that I put in the description of this video, and you'll see that it's just, yeah, I'm a huge, like, sorry. So what you'll see is that it caps here at about $48 or $49 per share in May 2016. So in May 2016, Uber's stock price was at $49 per share. Now it's at 43. So it's gone down in the past 4 or 3 years. And so the reason for this is the valuation has grown a little, but there's been a ton of dilution with bringing on new investors, giving stock options to employees. I mean, this is incredible. And so someone just said market cap 81 billion. Tesla 41 billion. Yeah. So that's a fascinating dichotomy here. Is you're seeing, that's part of the reason I don't think this valuation for Uber is going to last. Like, you see Tesla, how much scrutiny you have in the public markets. And Lyft just reported their first quarter, and now the stock is down like another 10%. And so I think these companies are going to realize that public investors are really tough. They need to show a roadmap to profitability, improving operations, continued growth. And if they don't, the valuation is going to crumble. That's why I think the key number to watch here of Uber, of course, is their operating loss and see how much money they're losing. But even more than that, I think is top line growth. Is this a growth company? I think we need to see them bounce way above that 22% level to get investors excited. I mean, they're like, oh, we're changing the transportation industry, and we're changing Uber Eats, and we're doing freight with autonomous freight. Well, it's like, well, if these are such big opportunities and disruptions happening, why are you only growing at 22%? Anyway, Tesla's growing at like 93% compounded since their IPO. So I think the valuations are going to crumble here. And I just think this chart is so interesting. Even if you go back to December 2014, 5 years ago or 4.5 years ago, the Uber's secondary share price was $33 per share. This is fascinating to me, for all those people saying like we're in a zero interest rate bubble, there's all these tech companies and unicorns that are way overvalued. Like, in many ways, this Uber IPO is validating a lot of those concerns, because you're seeing people who invested 4 or 5 years ago in the private market aren't even making money on this deal. And that's assuming the stock price where it stays where it is. A lot of them are locked up and they can't quite sell yet. Imagine, is there going to be a rush to exit as their lockups expire? Are people just going to want to get out of this thing when they see it crashing? Like, there's easy to see how there's a very negative psychology once an IPO breaks. And so I think this has, to me, all the signs of a broken IPO. We started a $120 billion valuation target. Now they're at $75 billion when they've started trading. They're not higher than the secondary share price transactions that happened previously, even 4 years ago. Like, if you started working, I graduated college just under 4 years ago. If I had started working for Uber just then and gotten all these stock options, they would have been priced like actually higher than or right around 40 per share, which is like basically the IPO price. So I wouldn't have even made money if I worked for 4 years. So how do you think that sits in the mindset of the employees of Uber and the talent of Uber? Uber's biggest asset is their data and their app. I think so. Yeah. I mean, Uber, I don't know how much data they have. Their data is good for making their network incredible, but it's not good for autonomous, vehicle data. I would argue Tesla has a huge advantage there. And so that's the other thing. So quick note on Uber's self-driving division and Tesla. So Uber's self-driving division was founded when they purchased a company called Otto, which was founded by a guy called Anthony Lewandowski, who had also previously founded Waymo. They built their technology stack on LiDAR. So does Waymo. So Uber and Waymo are both building on LiDAR. And what's so fascinating is now that Lewandowski on his new startup is saying LiDAR is not necessary. LiDAR is the wrong way. Elon is right. The guy who invented the program that Uber has, and Waymo, the biggest competition apparently, is like, no. So this is, I don't know why this hasn't got much news, but I think like that is also being priced in the IPO here. Is like, they just raised a bunch of money from SoftBank for their autonomous vehicle group. No one's buying that has value. I'm sorry. When the founder of that group said that their entire technology it's built on is the wrong way. So, so where does Uber go from here? That's my question. It's like, you're not profitable now, you're not making money, growth is slowing, autonomy is super far away, and you don't have a lead in it. So, someone said Uber AI comes from Carnegie Mellon. So maybe I'm wrong there, and that's not what their entire AI is based off of, but I believe they do use LiDAR. I don't know though. Yeah, so Tesla's not been profitable for their IPO. So that's a really interesting comparison here. So why is Tesla not making money different than Uber not making money? Because Uber's not making money, to me, on like per ride basis. Like the unit economics of what they're doing aren't attractive. The unit economics of what Tesla's doing at scale are super attractive to me. Like if you have building enough cars, that profit is going to start to flow to the bottom line and they're going to make a ton of money. Uber is not really showing that as they scale, their losses will come in and we'll be able to see profitability. Like I just think the unit economics of riding an Uber and Lyft are just not profitable. And that's the root problem of their business. So I think Uber and Lyft almost need to like get into a duopoly and start jointly raising their prices because everybody just checks the Uber and Lyft app. And so that's the only way I see this company really improving their margins. I mean, maybe Uber plays out Uber Eats, which is growing really rapidly, which if you go to HyperCharts, the second HyperCharts link, and click on the gross bookings, scroll down to the third chart, gross bookings, you can actually itemize out the different line items for Uber and figure out like how big Uber Eats is, how big the ride sharing business is, how big Other Bets is. And if if you zoom in on Uber Eats, you'll see it's exploding, like 2.5 billion in gross bookings, up more than 100%. But even that is, it's the ride business is so slow and big that it's not even accelerating the growth rate overall of the company. And so the other thing I love about Uber is they also have this like Uber Elevate pitch, which is hilarious, which is like one of their vision things of like, hey, like we're gonna have flying cars in the future. That's how we're gonna, solve this transportation problem and be profitable. So I just thought that was hilarious because I think there's not a chance that happens or makes them any money for so long. But the fact that they're saying that just shows how desperate they are. So this is really interesting to watch because I can't think of in my career seeing an IPO that I'm a consumer of the product. I use it all the time. I've been following the story. It's a huge hallmark of like this era of technology funded VC companies. We're seeing it go public and it's flopping. Like this is so fascinating. If you are a finance nerd, this is what you live for. Like seeing how the public market prices one of the most fascinating companies on the planet that millions of people are using, and watching how the public market gets to that valuation is so interesting. The public market is way smarter than people think. I think you can learn so much by seeing how the market reacts. And I think that's what we're learning with Uber. Like people just aren't impressed. And so someone said, how would I value Uber? What would I value Uber at? I would value Uber, I said in my pre-IPO video, at about 50 billion. And this was before they kept writing down the valuation. And so I'm still kind of at 50 billion. Like, I don't think I would be investing hand over fist at 50 billion, but I think it makes sense. Gally, when do you think Tesla will start using the Tesla network with fully working Autopilot? Probably like 2022. But I will say, I do have a tidbit from Elon Musk at Tesla Autonomy Day when I was like sort of afterwards in their conversation. Someone asked him if there would be drivers in the front seat of the Tesla network, like potentially hiring drivers to launch it. And he said maybe. So I think it's really interesting to think about Uber or Tesla actually launching the Tesla network with drivers to start, maybe. I don't know. So anyway, the point is, if you guys have questions, like keep hitting me with the questions. I love questions. I want to do a Q&A. So I want to, know whatever or cover with whatever you want to know. But my valuation of Uber is still about 50 billion. I think there's huge disruption happening in transport, and they have 90 million customers that, they're doing something right with product market fit, but they're not making money. And I think, so I think 50 billion is a fair price, but like I wouldn't pay 50 billion because I'm not convinced in the bull thesis. But so I hope that I won't short Uber. I don't usually short companies. If I do, I would buy puts, not actually short the company. But, if it's an app that I love, or I don't know, I wouldn't say I love Uber, but I use the app all the time and I use Lyft all the time. It's a great product. So one of my rules of shorting or like betting against companies is don't bet against the product that you use and think is a great product, even if they're not making money on it. Thoughts on the Tesla self-driving service? Okay, thank you for bringing that up, Mr. Raptor. So what is so fascinating about the Tesla network and the way this is all going to play out is right now Uber is charging about $250 per ride or charging $250 per mile, right? But it's costing them like $350 per mile to give you that ride at $250 per mile. So they're losing that margin, and you're paying $250 per mile. So guess what's about to happen with the Tesla network? They want to charge you like $1 per mile. Okay, or I guess this is the charging. So they're going to charge you $1 per mile, way below the $250 that Uber's charging you, and their cost is going to be way like 18 cents a mile is what they said. I don't know if that's right. Even if it's like 50 cents a mile, they're still making a ton of money. The point is, when the robot taxi happens, you're going to be able to get your Uber for half the price, and the company that's supplying that car or that robot taxi will actually be making money on that ride, not losing money. And so this, this is why I'm so excited about the Tesla network. You go from a car can produce 30 grand or 40 grand worth of revenue when you just buy it, versus a car that now can produce 200 grand worth of revenue in its lifetime if it's autonomously driving around as a robot taxi, and that's way more profitable. You have transportation as a service. The entire underlying gross margin economics of a vehicle are going to get flipped on their head, and this is why Tesla's going to be one of the most profitable companies on the planet if they truly can win this self-driving race. Doesn't Dara get a $200 million bonus if he can keep Uber past 100 million market cap? I think you're probably right, and you mean 100 billion market cap. Will the CEO get a huge bonus if he can keep the valuation up? I don't know. I haven't looked into that, but I believe it, and that's funny. What about videos on Uber AI? Yeah, so I should probably look into the Uber AI division more and really take a look at that and make a video. Do you think it would help if Tesla bought garages in different cities to help decrease the garage problem? Yeah. Or, nah, I mean, I think there's a lot of room for innovation in EV parking. Let's put it that way. Like getting apartment buildings on board with building chargers and figuring out where people can charge their EVs in urban environments is a huge problem, but I don't think Tesla will get into that necessarily. When do I expect the next Tesla autonomy event? I don't know, maybe in a year, maybe in 2 years when they're ready to launch it. Any more questions here? What's my plan for the next 5 years about HyperChange for this channel? I wonder if that we were wondering. Was the timing wrong? No. So I think the timing here is interesting. No, Lewandowski's got a new company. Will Tesla stop selling their cars? No, because rich people will still want to buy them. So the timing, I think, is interesting just because it shows how desperate you are. Like Beyond Meat, which I just did a taste test of and was not feeling it, but so that's a story for another time. But Beyond Meat, like these companies are, they're IPOing from a place of strength. Like it's strategic. It makes sense. They're getting a ton of money. Their valuation is exploding. Everyone's making money and cashing out. Uber is not IPOing from a place of strength. They're like at that Bloomberg thing that is in the link there, you can see employees aren't even making money on their shares. So, this to me is all signs of a broken IPO. That's a really, really bad sign when you IPO on not your terms, nobody's making money. That to me indicates the company is a slow moving train wreck. Think about the dynamics here. If you're Uber and you're crushing it and you're crushing it and your numbers are going to be great, then you're like, screw the public markets. Why would we go public at 74 billion? We were just valued at 74 billion in the private markets a year ago. Like we'll wait this out till we're worth 200 billion if we believe that, right? But they don't believe it. That's why they haven't. HyperChange's 5-year plan. Okay, that's way too long for me to answer in this video, but my plan, HyperChange, what you're watching is just me documenting my investing journey and following these technology companies and investing in them. And so that is something I believe will be a lifelong thing. And so I believe in 5 years, hopefully I'll be making a lot of cool, interesting investments. I don't know. And we'll be following on the channel. Roku. Roku's really interesting. I actually have a Roku TV right there, which I love, but I'm not convinced they have like much of a moat really. But I think Roku's strategy of actually building hardware is really cool. If you documenting your journey, will you show your net worth? Sure. I mean, I own 110 Tesla shares. That's like basically my net worth. So, other than my HyperChange equity. And so yeah. Any more questions? Anything you guys want to know? I mean, I can make a prediction about the Uber one here. Tesla autonomy, I think, is part of the reason Uber and Lyft are crashing. If you're paying attention, Lex Fridman, the MIT guy, just on Joe Rogan saying how far ahead Tesla is, the Lewandowski example I just mentioned, like the thought leaders are starting to side with Elon. And so I think the Tesla autonomy thing is weighing on these companies heavily, especially given that there's now a timeline for that. And HyperChange LLC, how much are we valued at? I don't know if I should say that. Just over $1 million, which I think is kind of crazy, but that is the valuation that I did raise money at, or a little bit of money. Lex should work for Tesla. Yeah, maybe he's trying to go for a job at Tesla, but do I think Beyond Meats will positively impact where food comes from? No, and where food comes from, I'm really sad that I haven't made, I did see the interview with Lex and Elon Musk. I'm sad that I haven't made an update on where food comes from. This is a super tiny micro cap that I used to follow on the channel, but like, I love that company and I like management, but like they kind of paid themselves way too much money and I'm not a fan of what they're doing anymore. And so I didn't want to make a video like, yeah, so I'm not a fan of the way that they're compensating themselves. It's actually disaligning from long-term incentives with where food comes from. So yeah, Impossible Foods, way better than Beyond Meats. Kevin, you're right, I agree. Any other questions here? I'm gonna go back, see if I missed any. Oh, the Tesla fully self-driving restructuring that just happened. I couldn't get much info on that, like who left or what. I don't know. But not good. You know, I think that's probably the most important team they have now, or one of them, and so I think that's really key. Do I have a girlfriend? No. Would you allow individuals to invest in HyperChange? Not right now, but because I don't know if I'll ever cash out of HyperChange. Like, a lot of people have asked me if they can invest in HyperChange. I'm like, this is me documenting my investing journey. Like, I'm sort of the product. It's really hard. Like, I don't see an exit. And so I don't want to raise money without really having a good exit plan unless it's people that I'm like super comfortable with and know. So that's why I don't like taking money from like all the HyperChainers, even though I'm just honored that people even think that. How can you become a HyperChange contributor? Email me stuff and I don't know, make videos and articles. And if they're good, I'll post them. Yeah, what am I raising money for? Oh man, I want to do a whole episode on the HyperChange business model. We're getting way off track right now. But basically I raise money so that HyperChange is making money and I could like pay all myself and all my expenses, but I wouldn't be able to travel anywhere. And that's the biggest thing. And so I kind of want to like stay like one step ahead. Like, you know how Amazon runs at break even? I run at like a slight loss to constantly invest in better content, whether that's equipment, you know, renting podcast studios is super expensive. And so, but I want to invest in that show. And so I want to be able to pay myself so I can live and do this full time, but also invest. And so that's why like invest in making the content better and just accelerate the growth of the company. And so that's why I raised a little bit of money. Create a HyperChange token on Bitcoin. That sounds like a really cool idea, and someone's actually pitching me on some token ideas that I'm working on. HyperCharts, my plan with HyperCharts, so working on that with Mo, who's awesome, and we are really trying to you know, this HyperCharts, the links I have there, make it so easy and fun to interact with with financial data, you know, and just make it easy. And this is, I'm like the biggest fan of HyperCharts and use it almost every single day, and I'm obsessed with it. And so it's scratching my own itch. It's a product that I've always dreamed existed and made financial data super simple and easy to interact with. And so, you know, our plan with HyperCharts is to, you know, keep expanding the scope of companies as well as the power of the platform, you know, in what you can do with data, how much data, the way you can compare that data, visualize it differently. It's like if you sign up for the premium one, like that's why I really appreciate the people who have, because like you're really investing in us and we want to keep making that product better for you. And so, and if you guys have companies, like we added Beyond Meat because you all love Beyond Meat. And so Mo added Beyond Meat and we got it on HyperCharts like ASAP because all you guys asked for it. So if you have companies you want to know, let us know. We're good on the tech side. Thank you. Okay, any more questions? These are awesome. I'm having so much fun, even though we're getting totally sidetracked from Uber. Would I ever move out of NYC? Maybe, but I love the East Village. Thoughts on BYD? Warren Buffett owns a big battery company, so that's interesting. What should Apple do with its cash? Keep buying back a ton of stock, invest in health. They need to figure out a good moonshot to use their cash. What should Apple do with the cash? That is really interesting. Scott Galloway, who I kind of have beef with because he said he would let me on my podcast but wouldn't, to talk about Tesla, actually has a really good moonshot for Apple's cash, which is for them to build a university and a tuition-free university to educate people and use their tools to do it, like the iPads and phones to be the like hardware of that platform. So that could be really cool. Buy a ton of apple farms. Ooh, the farming industry. I'm a huge fan of the food and farming space and the disruption there. That's why I was so bummed about Beyond Meats being like, eh. I do use Carta for HyperChange's cap table management. Has RJ Scaringe gotten back to me? Oh, I'm so glad someone brought this up. RJ Scaringe, the CEO of Rivian, said he would come on my podcast in a tweet, which I still have, but then like came to NYC and like his team didn't reply to my emails. He didn't reply to my tweets. I hit up the people I know that know Rivian, that I even hit up people that work at Rivian. Nobody hit me back. So, you know, opinion of Rivian, very exciting company. Amazon's invested, Ford's invested after I made my Moonshot Monday that they should buy them, which I think is dope. And actually know that someone who is on the Ford EV team is definitely watching this channel, who I have had conversations with shortly after publishing that Rivian video. And so, yeah, there's a lot of interesting things to unpack there. But anyway, Yeah, so they didn't want to talk to me because of the funding from Ford, which is because of the Moonshot. I don't know. The point is that RJ Scaringe is dope, and I love Rivian, and I'm pumped about the company, but he's just flaky with his podcast commitments. What can you say? You know, I don't know how to read that about a guy, but he's just a little flaky about his podcast commitments. You know, I would have appreciated an email just being like, nah, dude, I'm too busy. Sorry. I would have been like, cool. Like, that's cool. Anyway, Maxwell closing next week. That's going to be epic. I want to, yeah, the Maxwell acquisition, nobody gets how big of a deal this is. Like, the amount of coverage, and like Elon Musk on the conference call said, when someone asked him about the deal, he's like, well, oh, now you're getting into our secret sauce. So I think there's something really, I think like I've made videos about the Maxwell acquisition, and one of them got over 100,000 views. So thank you all so much. And that's one of my biggest videos. And I think this is a very big deal. And I think a lot of the things I'm insinuating about way better efficiency, way more sustainable batteries, no drying ovens with the dry electrodes, what that implications that has for the Gigafactory and Tesla's technology and cost roadmap is very material, and it's going to be a big deal, and nobody gets it or is thinking about it. So when the Maxwell deal closes, I'm going to be pumped. Yes, Panasonic and Tesla's relationship is souring. I think Tesla is trying to replace Panasonic or commoditize them out of the situation, and that is getting iffy. It's like a Mobileye thing. And so, yeah. Any more questions here? Any more questions? Yeah, actually, if you want to learn more about Panasonic and Tesla, Sean Mitchell, one of my buddies and YouTubers, put out an awesome video. If you just search Sean Mitchell, Panasonic, Tesla, just like a couple days ago, explaining their whole relationship. He did so much research. Check that out. When am I getting a Model 3? Probably not for a while, and hopefully never, because I'm going to get a Roadster too. I live in New York, so I don't know. Hydroponics Moonshot Monday. So behind you, actually right there, I have hydroponic peppers growing because I love hydroponics, and I think it's the future, and I'm really a big fan of indoor farming and aquaponics, and I think it's so much potential there. But there's not really any good public companies or like startups that are really doing it. Like there's a company called Aero Farms that did it. We got a super chat from Christopher, basically funding a Beyond Burger. Wow. Okay. I think I have to do it now. Gally, go to Bear Burger. Oh my. All right. So one of you guys, thank you. So wait, what was your name again? Christopher. Thank you. I guess I have to go to, that's a good note to leave this on. I'm kind of hungry right now, honestly. I might just do that right now. Okay. I just don't want the Beyond Burger. It was just like had a weird chemically taste, but I tried to cook it myself or with my roommate. So maybe that's why, but, yeah. And so thank you, Christopher. I guess I need to try the cooked Beyond Burger where it's prepared for me. I totally agree. So I'm going to do that. Any more chats? Your chats just, Maxwell purchase going to close next week. Hopefully. I just talked about that. Anyway, thank you so much, everybody who's tuning in. You guys are all awesome. I appreciate that. Always fun to go live. And anyway, I'll see you soon. My prediction on the Uber IPO here, just to end it, what I think happens, get back to Uber, is, Kimball Musk's Square Roots company. I have met with them. I don't think they're ambitious and their execution is good and they're going to solve anything. But anyway, my prediction for Uber is that it's going to keep falling. And I think whenever I see an IPO, like I've never seen an IPO this big with that much weakness. And I think when you see these signs, and this is why I wanted to make this episode with that Bloomberg link, was like when you see this, the insiders aren't making money. They keep having to write down the valuation and trying to be hush about that. Like this is a sign that deep down the market, the biggest investors, the smartest people in the world are not bidding up this company for a reason. They don't believe in it. And so that's my biggest takeaway, and I'm not saying, I don't know why, I don't know what's going to happen exactly, but if I'm reading into that, I think that means that Uber is a lot of downside from here, and that I still think my fair valuation of 50 billion is kind of what I think the company's worth trading at, even though I wouldn't buy it there. Anyway, you were all awesome. I do want to start a venture capital business on the side. If any of you want to get involved and have money to help me invest in startups, let me know. Anyway, you guys are all awesome. Peace out, HyperChangers. I'll see you soon. Have an epic weekend. Peace.